All right, ladies and gentlemen, I hope you had a wonderful day. Talk about a Monday. The green streak continues, and once again, we are opening up the week in the green. Now, today, by 0.01%, it was the biggest Monday of the entire year. Even if you pull the chart out, we recouped all of Friday's losses, but if you really zoom it out, I mean, the progress really wasn't there. So today, it's being categorized as a relief rally. We've been selling off for weeks at a time. You even had an update on the whole Israel thing. We talked about it yesterday, but here is the market. This is a quote. This is what everybody's saying today. Israel's ground incursion into Gaza appeared less extensive than investors had feared, and that is why we had some relief, not to mention all of the oversold conditions and all of that. There was good German CPI data, and tomorrow we're going to wake up to a lot of European data, but don't forget, this week we have a bunch of events. Powell on Wednesday, Thursday with Apple earnings, non-farms on Friday, so we're going to go over all of that, but as far as today, we got a little bit of relief, but to really see progress, I have something that I want to show you. So that's what I'm going to talk about. We are going to go over what you really need to see and to understand why this week is so important. I got a nice visual, and it's related to the bonds, and that's the topic that you have heard about nonstop. We're going to go over that, and then I'm going to go over the refunding. We talked about this a little bit yesterday. This came up today. You had a little reaction on the bonds, but once again, you're getting a movement, but it's not real progress. Things haven't moved too much, but that refunding announcement, you're going to get more updates the day of Powell, so I want to give you a little update, and then we're going to go over the play. So, Chad, I have all of that for you. What I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We will see you there in the morning, and we're going to be live for Powell and the non-farms this week. So it's a lot that we have, baby. Run it.
Walking to the couch, it's the joints on the legs. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, let's make today simple. Like I'm telling you, you got to bounce. Would I be excited about it? Man, have you not learned anything over the last 3 months? We need it to actually hold up and not get Raul showing up and then getting it rug pull. That's from equities all the way down to bonds. But as far as today, it boiled down to the Israel thing. Could have been worse or not as bad as expected. Once again, you're getting an invasion and you're watching the market be like, hey, man, I guess it's not that bad. So that's what drove a lot of today. But the only other thing you got to look out for, this was a big part of today. It was probably the most unexpected. It moved things around on the global scale and kind of got us trapped here early on in the morning. And this was a weird way to start off Monday because before Euro close, you just stopped moving. Even an hour after, that's when it took for you to actually start getting out of this. But what caused it? It was a rumor about the Bank of Japan. We've seen this happen every time. Yesterday, I'm telling you, everyone's saying nothing's going to happen. They're calming down. Just a couple weeks prior, they were getting really hyped up on a policy change, and then right before the event, all of the hype dies down, and coming into it, everybody thought that nothing was going to happen. The event is tonight, 8 p.m. Pacific time. You're even going to hear about it. I think they even have their press conference in the morning, so there's a lot of time to be digesting it between tonight and tomorrow morning. But the fact of the matter is, right ahead of the event, everybody started downplaying it, and then now today, this rumor came out. It was from the Nikkei. That's a publication out there in Japan. They said that the Bank of Japan may tweak policy and allow bond yields to go as high as 1%. This would be one of those minor tweaks. So this sent the yen going up. It affected our market for a little bit, and now tomorrow, you should, or tonight really, you should be looking out for a big policy change. So how I would look for it, it's very simple. If they just do some of these, allow the curve to go up to 1%, and it's more of this like subtle tweak, but not a real end to yield curve control and change, I think we may get a little bit of yen strength, but I think punt and then we go back to responding to all of the events in the U.S. Otherwise, if they really do change policy and the yen strengthens, the dollar should plummet, and that could even bring a little bit of relief up until everybody starts worrying about the other stuff, or if the data confirms, we won't have to, and then you'll get a good solid start off a YCC tweak. But now, do I think that's going to happen? No. The way it's been back and forth, I think a subtle change that leads you into it at the beginning of next year, but not quite. However, it's kind of on the table. If it does surprise and happens, we will be ready to respond, and it's not like our position would change anyway. So that's the good part. Doesn't really matter except for you're paying in time and patience, but hopefully this does end the end of the yen going down, and we'll see how that plays out. But that's the big thing. The only other thing now that we need to talk about, two big things. How does the rally play out from here? And then what do we have with the refunding? So before I get into it, I will just tell you right now, we're going to go to here and get this all out of the way. Tomorrow, you're going to get all of that European data and all of the CPIs and GDPs. Tomorrow, the ECI, this is related to prices. That could be important. And then you're going to get the Red Book and then some stuff about housing, as well as, I believe, Dallas Fed Services. Dallas Fed Manufacturing missed today. You didn't really quite get a reaction. So this is where I'm saying I don't think the data should move us too much. Maybe the ECI, then it's really going to be about digesting some of the hours or the earnings after hours. And today, surprisingly, you had earnings do good. They went up and stayed up. So we'll see if that could actually hold into tomorrow. But tomorrow should be pretty simple. Then before you know it now, it's Wednesday in all of the events. But have no fear, because there is something you got to be looking for. So I guess I'll talk about the refunding last, since we're going to deal with that on Wednesday leading into Powell. But this is what I want you to look at for this whole entire week. Where did that go? But how to understand why this week is so important. If you've been watching this video or these videos, this is something we have brought up. Not only have we talked about the 2001 versus 2006, and I encourage you all to go look up all of that or understand what I'm saying, because we got to see that in real time with how it played out. That was very important. I might even talk about that with you tomorrow as it relates to getting ready for Powell. But what we have seen recently, this is the one thing I wanted to show you on the month. We've talked about the first set of bond highs leading into 5%, then you watched it calm down, and then we came right back above it. But remember, I said you want to be below these peaks. That is going to insinuate that maybe this is just a little bit overblown and will settle into a lower range rather than staying above the peaks, and then that just means, yeah, maybe the trend is going to continue. So the point I'm trying to say with this whole week, what you got to be looking for, why today, yeah, we've rallied up, but if you really want to see relief all across the board after Powell, after all of the data, after all of the earnings, you still need the bond yields to come down on the longer end. Even go look at the 30-year, 20-year. You need these bond yields to calm down. But like I'm telling you, what you're noticing, even if we get relief, as long as we're holding above these peaks and not really relenting on tightening up those conditions, well, it's the reverse. It means conditions are tightening. So that is overall not been good. And that is what I think is going to be telling us, hey, where are we going to be ending up after all of this? After Powell, earnings, all of this end of the year, are we going to get a rally or not? Is it going to be good? Are we going to get a relief bounce? I mean, when it's all said and done, bonds have had no relief at all. And I think at this point, with everything 30 days into the whole bonds or the Fed not raising, we do need some bond relief. And if that's not going to occur, I don't know if any rally is going to be real, because this last 3 months have been bullying equities to respond to the bonds more or less. So that's the big thing that I wanted to share with you. I hope that makes sense, and I hope it gives you something over the next couple of days to be watching, and hopefully it provides a reliable North Star and compass so that we don't get fooled with all the things from Bank of Japan all the way to the refunding, the JOLTS jobs openings, the non-farms, and then Jerome Powell. But now, getting more into the schedule, let's talk about what happened today and what is going to happen on Wednesday. So this is the Treasury website. You literally just search Treasury quarterly refunding on Google. It'll take you to the treasury.gov, and you go here, and then today click most recent quarterly refunding documents. This is what came out today at 3 p.m. You click on the first link, you get the simple phrase here, and it tells you everything. The budget for the Treasury was $776 billion. This was $76 billion lower than what was announced in July, and then they announced how much money they are looking or expect to borrow for the next quarter, January to March 2024. So it's 816. The last couple of ones throughout pretty much this year, they've been upwards of about $1 trillion. So what exactly does that mean? This is the Treasury, Janet Yellen. They're saying every 3 months they need a certain amount of money to conduct all of their activities. How do they get that money? They sell bonds. So this is telling you how much bond supply they expect in the next 3 months. So why was it good news today? Because we learned that it was $76 billion lower than they announced last quarter. You see how today they're announcing $816 billion for the beginning of the year? Well, they had a number last quarter, and today's number came in $76 billion lower. That's good for the bonds because it means less supply. You had a little bit of a gain, but like I was saying, you look over all of it, it's like, yeah, that should be good news, but in the grand scope of how bonds have moved, it was a drop in the bucket, and you didn't really spark anything off of that. Now, what we got to look for on Wednesday morning, we're going to get the composition, and this is what I was saying all morning. This is the meat of the bone of all of it. We want to know, are they selling more short-term bonds or longer-term bonds? If they sell more longer-term bonds, that necessarily won't be as good because you don't have the Fed buying it. There's not real supply except for the market funds and all of that, and quite frankly, everybody's been kind of wary of the long-term bonds, especially if rates are going to keep going up. So what would be better is if they announce that, yeah, we're selling $76 billion lower, and most of it's on the shorter end. That means the market will be able to absorb it, aka the Fed, and then we go from there. So that's why Wednesday morning you're going to be filled with a lot of stuff. You're going to get this info, then you're going to get the JOLTS jobs report, and then by middle of that day, you're going to hear from Powell, and then it's earnings, and then everything else. So Chad, I hope you're ready for it. It's going to be wild, but now let us get into the plays. So, right off the bat, I got 3 different plays that I'm looking at for tomorrow. One of them I made a play on. I guess I'll just start with the first one since it's on the screen, but Pinterest. I actually am surprised because out of any of the social media companies, they beat top and bottom line. They even grew their users, but here's the thing. They didn't warn about everything. They said ad market rebound, and Facebook warned about the Israel situation, so did Snap. Google didn't either, but their rebound wasn't as, like, I guess, sophisticated or bigger. I don't think sophisticated is the word, but, you know, with a growth stock like Pins, market liked it, and it held up. And like I was saying, ANET, they ended up beating Wolf. Most of the earnings today that did good, they went up and they held up. So this is not something we have seen so far. So maybe take that with the relief, or maybe we see a slighter trend change on the second half of earnings, and now the companies start responding. But either way, Pinterest, that's a good one. I'm going to be watching it. Only downside is it's up a lot, and really what I'm looking for is it to play out like Netflix, where now it gets its immunity idol and is able to hold up. So that is play number 1, Pinterest. Watch out for that. Then play number 2, we're jumping to the option chain, PayPal. You guys kept asking me about this one today. I made a play on the options, and I went with the January 80 calls. I grabbed 50 of them at 14 cents, so it was about like $600-$700 total, so a kind of decent amount there when it's all said and done. It goes to January 2024, but the thing about this play, why I went with the January, is this one 2 standard deviations? No, it is not. The reason why I went with January is because I wanted to go further out of the money, and I wanted the option chain that was already exposed to the last like 2 years of PayPal, meaning it had all of these super duper cheap contracts. So I tried to find a spot where they weren't like too cheap from dead and something realistic, and I landed on the 80s. And why? Because PayPal was recently near $80. Again, prior to their last earnings, it was around $75 there. Then it started going down, but even at the beginning of the year, they were at $89. So think it's realistic, has a little bit of time, but the only way we win is if we get lucky and PayPal blows it out the water, but maybe we get some of that here on the second half. So that is play number 2. Watch out for that one, and definitely be careful. It is an earnings gamble. And then play number 3. This one's a little weird. We brought it up not too long ago, and I think they're going to change their tickers, but something else reminded me of it today, but Overstock. And the reason why I want to look at Overstock is because they had the activist investors. That was over there, and literally there was like VFC today after hours. We even heard of like MCI or another company that had like exploring a sale, activist stuff from prior, and maybe we start to get this, especially if we get more relief. You were hearing a lot of that news when the market was going down. down. Let's see how that plays out, but it reminded me of Overstock, and why? Because, dude, they had a bad earnings. They ran up into it. They sold off on their earnings, bounced up, sold off again, and now they're back up here. And last time we've seen, there was some fun just buying in and out, back and forth, and they got that name or ticker change coming up. So thought it'd be interesting. We do have it in the long term, so watching out for that. But that is play number 3. I said it like I had another play, but wait. Oh, yeah, and another one, RTX. I sold out of this with the shares. We had 200 shares for earnings. Got like 9-10% on it. Not too bad. It was like $1,300 net profit. Closed out of that because some of the calming down here with those tensions, and you're seeing how the market may kind of normalize some of the Middle East conflict. And this is something I talked about today, where does it mean the problem's going to calm down? No, it probably will actually get worse, but we're kind of getting used to it, meaning like it could go on and you're not going to get whipsawed around or watch gold or oil kind of do that all the time. It's still in the early stages, so you're going to get more random bursts of it. But for the most part, just think about it. Before we had this conflict, I mean, the market was ripping, doing whatever that we had, and you had another armed hot conflict going on in another part of the world as well. So we'll see how this all plays out. But the way I'm looking at all of it, we got to go slow. We either survive this year and punt till next year, or a lot of the problems from finance to war, whatever, materializes at the end, and then we start thinking about, oh my gosh, what's happening in January, and then cutting rates and everything else. I don't want to say that. No, I didn't mean that, Powell, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and I need you to remember to enjoy everything. Oh, man, I hope you feel me on this one. And what I mean by that, bro, there's more to the stock market in the world than the stock market in the world. Make sure you're in a good mental place. Make sure you are thinking about the long run and how to handle the short run, because the hardest part sometimes is getting through the 365 days, one day at a time, baby. So, Chad, stay in the game, stay focused, and stay diversified. That's something else that we added on there today. But, Chad, I love you. Drink that water, stay hydrated, healthy, all that good stuff. I'll see you in the AM, and that's it. Good night, good evening, morning, horn.